The Swiss view is running. Some really interesting things to cover. Obviously, we've seen escalations around the world and gold hitting an all-time high. Again, continually, month after month, it feels like it's hitting new heights. Interest rates are dropping. The ECB just dropped interest rates yesterday.
Right.
25 bips. The US dropped interest rates just after the last time we talked. Switzerland is coming up to an interest rate decision where speculation is that they'll drop interest rates as well.
Yeah, but Switzerland will be after the Fed. So Switzerland,
Sure.
as we have discussed in other editions, they do it on a quarterly basis, kind of, not on the monthly.
Yeah, but again, all of these things kind of happening. We've seen the US dollar lose some value and then start to tick up again.
Right.
And, we've kind of seen some turbulence in the markets, especially in the data. We've seen job numbers go bad in the US and then all of a sudden spring out of control recently in terms of new jobs created. Let's try to just kind of dig in and see what we have. Let's start with the interest rate decisions. Obviously, as they come out, they have an impact on currencies and where they're going, or where countries are going. So why, could you kind of give some context, I guess, to the ECB decision to drop by 25 basis points?
Yeah, I mean, the ECB, they have a sense, or like the perspective of the economy, that they see how inflation is coming down, but they also see how the economies are struggling and that there are more and more economies being added into the circle of struggling economies. So for them, it's really important to bring interest rates down so there are like more affordable or accessible financing opportunities coming up for the companies and for the people in these economies.
Something that's interesting to see as the Fed shoots for a soft landing. Europe is in a different place. Many of the countries have already went through a recession, and they're trying to find their feet, I guess, in that market. So it's interesting to look at kind of that position where they're at, where in Europe, some of the countries are going to be okay with 6% unemployment, where in the US, they're at 4%, a little bit above. And that's a bigger problem talking point in the US, even though that's pretty low unemployment in general.
Yeah, but I think within the US, it's I mean, the Fed has two goals or two targets. One is to keep inflation under control, and the other one is unemployment. And so they have the understanding that they got inflation under control. Otherwise, they wouldn't have to drop 50 basis points within one meeting, which I think is more a sign of desperation kind of than of strength. And now they say, okay, we have inflation under control. It will come back to about 2%. So let's focus on the employment rate. And so it will be interesting how that turns out. As you said, the most recent numbers of people employed has increased. But if you go more into detail, you read it as well. You see where these jobs are coming from.
Yeah, and it's massively in the government sectors or heavily subsidized sectors at state, local, and federal levels.
Yeah.
So there, it's okay. Job markets look all right. How sustainable is it? How will we pay for those jobs? Kind of moving on from interest rates to currencies and gold as we kind of roll into these two or three subjects into one. Right. Where do you think the euro is going to head against the US dollar, or even the Swiss franc against the US dollar? Do you see this little uptick? We saw the US dollar lose some significant value as the interest rates dropped,
right.
But now we started to see a little bit of an uptick. Do you see the Swiss franc or the euro kind of doing a similar thing of weakening and strengthening, or where do you kind of see, I guess, if we say a 1 year time frame, where do you kind of see things headed?
I think the current development of the US dollar is driven mostly politically, not that much economically. And as you said, the first reaction, and we also wrote that in our newsletter, the Swiss view was that they dropped interest rates by 0.5%. That led to lower opportunity costs. So for holding US dollar than to hold other currencies. We have explicitly mentioned emerging market currencies that usually benefit in such a scenario. And now we have seen this turnaround, which also makes sense in a way that it was just a very strong drop at that time, but also that we have seen some presidential candidates mentioning that they will go very strongly against governments or economies that try to get rid of the US dollar as a reserve currency. And that led to some kind of counter movement where people thought, okay, look, if we have a president that is like shooting that hard against economies that want to get rid of the US dollar, then probably it will have some effect, at least in the short to medium term. My argument is that in the long term, it will even push it harder to like the desire to get away from the US dollar.
Yeah, I mean, in general, what we see in that assertion of weaponization of the U.S. dollar, which we've seen now for decades and decades. It's not a new thing. It's the whole reason we have these nations going away or trying to go away from the U.S. dollar as its reserve currency is for these moves or these hardball plays to control monetarily kind of how those countries function and also support the United States in having a strong and stable, for most parts. If you look at all the currencies in the world, the US dollar would be considered a more stable currency. There are other currencies that are more stable and actually have better performance against the US dollar, but it still has value in it. But if it loses its reserve status, the US is going to be in trouble. I mean, they have incredibly high amounts of government debt. Who's going to pay for it? Essentially, the U.S. government is indebted to its own population. 2/3 of the debt is to the United States public institutions, whatever. So a lot of the money is inside the country. If you lose that 1/3 that's outside of the country as reserve currency, you're in some serious trouble for not just high inflation, but really high inflation.
But that's a perfect point you make also about the debt. I mean, the costs that are related to provide the reserve currency, the global reserve currency, are immense. And we're having the US with a debt to GDP ratio. It's, what is it, 130%?
Well, it's about 120-ish, 124. It came down because of high inflation.
So it did come down, but it's it's increasing, and you see like the costs, like the interest payments that are related to the debt, how they are picking up and are as high as they haven't been since World War II. And so, I mean, even so the US government wants to protect the US dollar. In the short term, that might work, but in the long term, the faith in the US dollar will weaken further and further. And we already today, I mean, there are so many people, there are so many institutions, they don't have the faith in the US dollar anymore, and that's for different reasons.
Well, and that's where we see a lot of central banks moving on to our kind of final point of gold.
Yes.
We have, in the past 4 years, have been seeing unbelievable amount of gold purchases, gold and silver purchases in particular. We're going to talk about gold. And where it was really the amount of gold being purchased by central banks from 2021 to 2023 was massive. And it tapered off a bit in 2024 so far, but it's still been at elevated levels. It's been growing. It's not been flattening out or slightly decreasing. It's still growing. And this is kind of this push of, okay, do I want gold or do I want the reserve currency? And this is going to be this battle in terms of currency, of what's behind the currency, what's behind the economy, what's the levers of economic play. Is it going to be gold or the currency? I think it's also why we've seen gold finally really start to take off. I mean, when the two wars initially kicked off, we saw a little bit of growth in gold, but not a lot. It's really been this year. It's absolutely gone crazy. And people are just, I mean, especially I was reading I was reading about silver prices and gold prices and how there's a certain percentage more of purchasing costs that you can get at some foreign exchange in the East that you're getting in the West. And so there's a huge flow from one to the other because, hey, my gold is worth so much now, I better realize some gains. And so this is that challenge of where is the value, and as US dollar drops, obviously in some value, that's going to push gold a little bit higher to try to, people in general try to take gold as a hedge against inflation. So, we do see this kind of effect happening now to gold, which, it seems to be driven by a lot of the central bank buying and people willing to sell their gold after holding on to it for so long. And it just keeps hitting record highs, even if they sell at the first record high at 2,300 at the beginning of the year. If they sold 25%, they still have more to sell as it goes higher and higher, and so we see that accumulation over time.
Yeah, but I also think it's interesting to see how not every central bank is acting the same way. So
Sure.
for a long time, for a couple of years, there has been the People's Bank of China accumulating gold and being very proactive or aggressive in buying gold, and they stopped in August. So the question there is now, have they stopped because they have enough gold? Have they stopped because they think, okay, at that price level, it's not worth anymore for the moment? Or have they stopped for any other reason? But at the same time, we still have governments that buying gold. And yeah, I think it will be interesting where this leads in a way that where is a point where central banks say, okay, look, uh, we don't buy at the price levels anymore, because central banks have another time horizon usually than individuals. So they buy and they keep it as long as they want, more or less. And so I could imagine that at some point, and I also said that earlier this year already, that at some point there will be a correction in between where gold will lose some value because people, individuals, or also central banks say, okay, at that price, it even makes sense to reduce the exposure again. And on top of that, it's also we talked about the unemployment rate and the economic situation in certain countries. And what we also see is that also in the US, people don't um, don't quit their jobs anymore because they don't have enough confidence that they will find another job. And so we also see that the savings that has been accumulated during COVID, it's gone, and it's even more like lower the savings rate as it has been before COVID. And so at some point, maybe people also have to sell gold and to realize these gains to cover some kind of costs.
Yeah, absolutely. And I think with a lot of uncertainties in the market, not just the buying activities, but the uncertainties, there is just a heavy demand for gold. I mean, with wars kicking off or being escalated, with the U.S. presidential election happening, and it seems to be neck and neck as we rapidly approach election day. There's a lot of uncertainty for everyone involved, not just one side that thinks they're the clear winner and there's uncertainty somewhere else, but there's just a lot of uncertainty. And that's an environment that gold can really appreciate in, because it has been for thousands of years the standard of value.
That's correct. But I think there was one other point we also then must not forget, and that is, I mean, during normal times, the people or the individuals or institutions that purchase gold, why do they buy it? They buy it as a part of their overall wealth, as wealth preservation.
Yeah.
As you said, inflation. And I think at the beginning of this year, we have entered a stage where gold has become more of an investment to have a strategic allocation to say, okay, I want to benefit of the increase in gold. And if you, like, for the listeners who are in the markets or around for a longer time, if you think back to 2010, 2011, when gold reached an all-time high, think about what was the sentiment back then. From one day to the other, more or less, everyone was talking about gold. Yeah, you have to have gold. You have to buy more gold. We offer gold. There were new companies coming out from nowhere selling gold. And so I think it's also this performance we are experiencing right now has also been taken with a grain of salt, that maybe once everyone is talking about, maybe then it's not the right moment to build your whole position. Maybe you can for sure argue to say, okay, let's make a first step, or let's increase it a little bit, but you shouldn't be, oh, now everyone is talking about, so it goes to the moon. Maybe it does, maybe it doesn't, but you always have to take a step back as well and think, okay, what are the longer term expectations and what is realistic? Because if you invested at the high in 2011 at 1,970 US dollar an ounce, you had to wait until 2018 until you were close to back where you started. Yeah. So that's quite a long time. And in the meantime, it dropped to even a little bit below 1,000 US dollar an ounce. So you really have to have the nerves and the time horizon, the perspective to stay invested and to keep it as as an overall allocation that makes sense for your wealth structure in the long term.
Absolutely, yeah. I think that's a great point, and I'll shamelessly bring this up that Jamie, who's not on our podcast, but our CEO, she actually wrote a white paper talking about the U.S. elections, and what kind of approach you can take in portfolio strategy, understanding each side, should they win, what kind of direction they're going to go, and strategic moves in terms of what to think about when thinking about your portfolio strategy, and also talking about the reality of building a portfolio that is timeless. Essentially, how do you preserve your wealth in and out, political change, instability, whatever? How do you build a portfolio that's going to be able to preserve your wealth, preserve the purchasing power as an American through diversification outside of the U.S.? So our listeners, if you're watching, please, you'll find the link to get that report that you can read yourself before the election, so you can read and get all the knowledge that you need to think about your investment strategy.